Welcome to The Explainer. Today, we're decoding a really fascinating and complex divergence that just hit the Korean market. We've got this massive split happening, semiconductor de-risking on one side and aggressive AI power infrastructure accumulation on the other. It's a classic battle of signal versus noise, and it's absolutely going to dictate how capital flows into the U.S. session.
Okay, let's jump straight into the catalyst driving all of this. The U.S. 30-year yield just hit 5.197%. To put that into perspective, we literally haven't seen levels like this since 2007. And when yields spike this aggressively, you know what happens, right? It acts like a giant gravitational pull on equity valuations, especially for high-growth tech. So take that yield spike, combine it with the heavy uncertainty hanging over the pending NVDA earnings, and boom, it immediately activated a dual de-risk in semiconductor names. The KOSPI dropped 0.86%, but here's the wild part. Foreign investors concentrated a whopping 92.7% of their net selling straight into the electronics sector. They were mechanically taking risk completely off the table. Section 1. The opening signal. The event-dependent equilibrium.
Now, let's think about Samsung Electronics. Despite taking a steep 4% intraday nosedive, which, by the way, was triggered by labor strike risks, the stock actually managed to claw its way back to a flat close alongside SK Hynix. And they traded a massive 19.3 trillion Korean won combined. What we're witnessing here is wild. It's foreign de-risking balancing perfectly against domestic buyers who are just fiercely anticipating an NVIDIA earnings beat. They essentially fought each other to a dead standstill.
Section 2. Market transmission path. The AI power infrastructure thesis. So the transmission path actually started right here. Samsung Electromechanics disclosed a massive 1.55 trillion won, or roughly $1.03 billion silicon capacitor contract. Listen, this wasn't just some market rumor. This legally confirmed AI server component demand at a binding commercial scale all the way out to 2028. The market instantly caught on to the magnitude of this, and the stock just spiked 7.5%. Now, we're going to track the data points as they stack up, starting with power generation. The crucial takeaway here is that you simply cannot expand AI server capacity without the massive data center power needed to run it, right? Smart capital knows this. As a direct result, foreign investors aggressively stepped in, accumulating 25.7 billion won of doosan They focused squarely on the heavy power generation equipment required for that baseload power. And this perfectly highlights the heavy physical reality of this data. Just think about the sheer scale of this machinery. You literally cannot run next-generation AI processing in the cloud without massive industrial-scale power generation equipment built by heavy industry leaders like Doosan. The AI revolution is incredibly energy-hungry. Let's build on that and look at the next layer of data as it stacks up sequentially. Foreign capital didn't just stop at power generation. They methodically tacked on 19.6 billion won of Hyosung heavy industries. Why? To capture the power transformer supply chain. Because of course you have to step that voltage up and down for the data center grids. Finally, completing the data sequence, they added 16.7 billion won of tie-hand cable and solution for the physical grid transmission. What is absolutely critical to catch here is their surgical precision. They actively avoided the broader, more generalized utility sector, completely bypassing companies like KEPCO, to exclusively target the pure-play AI power supply chain. It's a highly targeted play. The hidden signal here, the real canary in the coal mine, if you will, is that foreign investors were buying Doosan Enerbility into a 4.43% decline, right at the absolute peak of NVIDIA uncertainty. Guys, when smart money buys into price weakness during peak macro fear, it proves this infrastructure trade operates entirely independently of whatever NVIDIA is about to announce. It's structural logic, it's not just event momentum. Section 3, Trade Execution Mode, the bifurcated logic. So the ultimate discriminator tonight is how the NVIDIA earnings report is going to interact with all these flows we've just laid out. The numbers and video prints will either firmly validate or temporarily invalidate these dual capital movements. Here is exactly how the logic breaks down. On an NVIDIA beat, both the tech equilibrium and the infrastructure trades activate simultaneously, looking for validation through US proxies like Vertiv and Eaton. But on the flip side, an NVIDIA miss means the event-dependent semiconductor trade reverses sharply. Meanwhile, that structural power infrastructure trade retains its independent foundation. Because, at the end of the day, data centers still need power, regardless of one quarter's chip numbers.
But hold on, NVIDIA isn't the only risk event on the calendar. We've also got to heavily weigh the FOMC minutes dropping at 2 p.m. Eastern. This introduces some major macroeconomic gravity to the session. If the FOMC tone is hawkish, the Nasdaq faces intense downward pressure. That conditionally invalidates our AI infrastructure rotation simply because the broader macro environment just becomes too hostile. But if it's dovish, the probability of a 25 basis point rate hike retreats, giving that infrastructure rotation logic a totally clean, unobstructed runway to take off. Section 4, Final Validation Checklist, U.S. Session Targets.
All right, here is your rapid-fire chronological sequence for the day. At 9:15 a.m. Eastern, keep an eye on Michael Barr's remarks regarding yield pressure. Then, at 10:30 a.m., we have the EIA crude inventory, where a large draw could really intensify the inflation logic. At 2 p.m., those crucial FOMC minutes drop. And finally, the main event, at 5:30 p.m., the NVIDIA earnings print.
Wrapping all of these catalysts together, the absolute critical validation line for tonight's U.S. session is the Nasdaq futures pre-market price of 29,100. Write that number down. It is the ultimate line in the sand. The mechanics here are crystal clear. If we hold above 29,100, the AI-powered infrastructure upside scenario remains entirely valid and intact. But if we break below that level, the pre-market signal fails, and the hawkish FOMC scenario takes absolute priority, immediately shifting the entire market tone to defensive.
So I leave you with this crucial question to ponder as we head into the opening bell. Is your portfolio positioned for the fleeting noise of a single earnings event or the massive, unavoidable structure of physical power demand?